And now this, President Trump expected to lift restrictions on ethanol. Joining us now, John Hofmeister, former president of Shell Oil. All right, John, who does this work out best for?
Well, I think ultimately it works out best for the American consumer because the additional alcohol fuel, which is what ethanol is, means less imports. It means less dependence upon OPEC pricing. And so the extent to which we can increase alcohol fuels, we will continue to produce domestic oil products. So I think it's a benefit to the American consumer overall.
This has always been sort of a political issue attached to this. In other words, why is that? Why is it subsidies or what has it been? I know, of course, Iowa, where they start the elections off, it's always been seen getting an extra break. Or is it? Do you see that as well?
Yes, absolutely. I think, in fact, Al Gore once said, were it not for the Iowa primary, we wouldn't have an ethanol mandate. But, of course, we do. So initially, we get our ethanol primarily from corn. But as we look ahead, there's every opportunity, and I've said this before, there's every opportunity to use natural gas to make ethanol or methanol, which is another alcohol-type fuel, all of which burn just fine in today's modern cars.
Well, of course, the price of corn has come down so much in the last few years. I do want to switch gears a little bit. Speaking of price, John, national average gasoline, $2.91. So the big question right now is just how much higher do you see us going, as it looks like crude oil on a cusp of a major breakout?
I think you're right. I think there are two dynamics that are forcing price of oil up, and I think they're unrelenting for the near and medium term. One dynamic is the fact that during the low oil price era, we pushed out all kinds of investment spending. All kinds of new capital did not go into producing new reservoirs, new oil fields. Instead, we were living off what we had because there wasn't the capital to spend. Secondly, and so we're going to suffer the effects of not having invested over the last 3 to 4 years the way we had previously. Then the second dynamic is the fact that OPEC itself is in disarray. Who can rely upon Libyan oil? Who can rely upon Nigerian oil? And who can rely ultimately on Iranian oil when the sanctions take effect? So the OPEC countries themselves are going to run short, I believe, of their own production, right, although the Saudis say they'll jump in. In principle, I believe they intend to, but whether that actually materializes, we don't know. So I think we're really on the edge of seeing a significant rise in the oil price.
John Hofmeister, always appreciate your expertise. Thank you very much.
Thank you.